tell us about one stock that as of right now you think it's a good buy, and why. And I know you've already told us a lot, already shared a lot of tickers, but tell us the one specifically you're very excited about and why.
I have one that I'm watching, and it's nothing extravagant. It's a very well-known company. I'm watching Disney pretty close right now. I'll tell you two reasons why. It's at the end of what's called a consolidation pattern. It's a falling wedge breakout pattern near the end of consolidation and near the end of what we call an apex. They will either break to the up or the downside. Typically, they break to the upside, just as Alibaba and Baidu did last week. Long-term consolidation, the resistance keeps falling, and the support keeps rising, and it basically squeezes these to have these big breakouts. That's why you've seen Baidu and Baba just really rip off that news, Apollo Moon and all that last week. But it was the pattern, essentially, that I was watching. I'd highlighted what's called a break point, and literally as soon as it broke that downtrend, it gapped up over $10 a share. Disney's in the same sort of pattern right now. It's been consolidating for a while. I read the earnings report off their last earnings, and they doubled their subscribers for Disney Plus over the last year. And to some, that was disappointing. And for me, I seen optimism, because right now, it's trading at this price mostly off of Disney Plus. Right now, the parks are reopening, and as people become more vaccinated and venture out and start to do a lot more traveling, you mix Disney Plus with the park reopening and all the new additions that they added to it while it was down. I just think that it can see some upside off that level, at least 200, 205. Long term, I think it can go a lot higher than that. Long term, I think Disney goes to $250 to $300 if you're looking very long term.
Yeah.
But right now, it's at a good level towards bottoming out. Just had a triple bottom and end of consolidation. So I kind of like the level it's at.
Love it. As we were speaking, I pulled up Disney's stock card and just looking at it, because in my mind, Disney's already had a big run since when it was 100 and something before the pandemic. So I always thought, I'm not going to take a look at Disney, but as you intrigued me and I was looking at it, at a stock card, even the stock valuation, fair share price is now fairly priced. It's not overvalued. In some of the indicators, there is that analyst average price target is 206. So you're even more aggressive than the rest of the analysts based on your logic, which makes a lot of sense. And price to book value, it's interesting. It's 3.7 times book value and lower than average price to book value of the relative sector. So we all feel there's this moment feeling of, oh, the stock already has been so much up, so there's no upside left. But then when you look at the data and logic and charts, as you were talking about, it seems like there's a lot more opportunity and upside left there. So yeah, I'm gonna definitely watch this one, and we'll check in with this after it has a good run in a few weeks, as you mentioned. So that's super cool. Thank you.
Oh, no problem.